What's up everyone, and welcome to the channel. Want to start investing but feeling clueless about where to begin? Trust me, I get it. 2025 is your year to make your money work for you. In this video, I'm breaking down the essentials of investing, specifically designed for beginners like you. No complex jargon, just straightforward advice to get you started on your investment journey. Ready to transform your finances? Let's dive in. Okay, so let's start with the basics. What exactly is investing? In simple terms, investing is like planting a seed for your financial future. You're taking a portion of your money and putting it to work with the goal of it growing over time. Think of it like this. You could keep your money tucked away in a savings account, but with inflation constantly rising, its value actually decreases over time. Investing gives your money the potential to multiply through compounding returns. Basically, it's like earning interest on your interest. Over time, even small amounts of money can grow exponentially. This snowball effect is what makes investing incredibly powerful for building long-term wealth. Remember, investing isn't about getting rich quick, it's about making smart, strategic decisions with your money. Now you might be thinking, can't I just save my money instead? Well, here's the thing. While saving is crucial, it's not enough to outpace inflation. Inflation is like a sneaky thief that slowly eats away at the value of your hard-earned cash. Investing has the potential to outpace inflation and actually grow your wealth. By putting your money into assets like stocks, real estate, or bonds, you're giving it the opportunity to generate returns higher than the rate of inflation. Think of investing as a way to protect and grow your purchasing power over the long term. It's about ensuring that your money maintains its value and helps you achieve your financial goals. Now that you understand the why behind investing, let's dive into the what. There are tons of different investment options out there, each with its own risk and reward profile. But don't worry, I'm going to break down some of the most common and beginner-friendly investments. First up, we have stocks. When you buy a stock, you're essentially buying a tiny piece of ownership in a publicly traded company. If that company performs well, its stock price goes up, and you make money. Of course, the opposite is also true. If the company struggles, the stock price might go down. Next, we have real estate. When you invest in real estate, you're buying a property with the goal of generating passive income or selling it for a profit later on. Then there are ETFs and index funds. These are like baskets of stocks or bonds that track a specific market index, such as the S&P 500. The key is to find investments that align with your risk tolerance, financial goals, and time horizon. Alright, ready to get started with investing? Here's a step-by-step guide to get you going. Step 1. Set financial goals. Before you even think about investing, you need to define your why. What are you hoping to achieve through investing? Your goals will determine your investment strategy, risk tolerance, and the types of investments you choose. Step 2. Choose a brokerage. A brokerage account is like your gateway to the stock market. It's where you'll buy and sell your investments. There are tons of great brokerage platforms out there, such as Robinhood, Vanguard, Fidelity, and many more. When choosing a brokerage, consider factors like fees, account minimums, investment options, and ease of use. Step 3. Start small. One of the biggest misconceptions about investing is that you need a ton of money to get started. The truth is, you can start investing with as little as $5 thanks to fractional shares offered by many brokerages. Don't let a small budget hold you back. Step 4. Diversify your portfolio. Diversification is crucial for managing risk. Instead of putting all your money into a single stock or asset class, spread your investments across different industries, sectors, and asset types. Step 5. Invest consistently. One of the most effective investing strategies is dollar cost averaging. Even seasoned investors make mistakes, but as a beginner, it's especially important to be aware of some common pitfalls to avoid. Mistake number 1, panic selling. The stock market is like a roller coaster. It has its ups and downs. It's completely normal for the value of your investments to fluctuate. However, it's crucial to avoid making emotional decisions based on short-term market movements. Panic selling when the market dips often leads to selling low and buying high, the exact opposite of what you want to do. Mistake number 2, chasing trends. You know how everyone seems to jump on the latest investment bandwagon? It's easy to get caught up in the hype. Remember, just because something is popular doesn't mean it's a good investment. Do your research, consult with a financial advisor if needed, and make informed decisions based on your own financial goals and risk tolerance. Mistake number 3, not having a plan. Having a well-defined investment strategy helps you stay focused on your goals and make rational decisions. And there you have it, folks. Investing doesn't have to be intimidating. Remember, the most important step is to simply get started. Start small, stay consistent with your contributions, and watch your money grow over time. Which investment strategy are you most excited to try out? Let me know in the comments below. And don't forget to hit that like button and subscribe for more beginner-friendly finance tips. Until next time, stay informed, invest wisely, and keep crushing those financial goals.